It is an absolute pleasure to be here with you all. Excel data has been flourishing these last few years. We have a lot to talk about. This world has changed so dramatically, even in the last year since I actually did the keynote. So today's session, I wanted to spend a bit more time on really what's going on under the covers of this sort of wave of agentic AI. And the only backdrop that I can really provide in terms of what's happening is to compare it against what we've all known for the last 25 years in SaaS. So I affectionately call this the end of the SaaS world as we know it. Okay, I'm Mathew. I'm one of the managing directors at Insight Partners. For those of you who don't know Insight, we're the largest software investor in the world with over $95 billion of assets under management. I do a lot of our work in our early stage investing, particularly in all things related to data, AI, ML. Besides an incredible company in Excel data, there are some also incredible companies that are flourishing in this moment. I'm not going to read down the list of those companies. You might know some of them yourselves. The key premise that I wanted to start the conversation with today is that software organized work. That's what we've always known that software has done for us for over 40 plus years. The shift that we are still grappling with as everyone in this audience and everyone in the enterprise is that AI does the work. And that shift is something so profound that we just have not been able to fully comprehend the magnitude of what is actually happening in front of us. And so what I thought I'd do is just kind of lay out what this means in very simple context. Software has become an enormous industry. And we as software investors, starting 30 years ago in our journey at Insight, became the largest software investor in the world. And we benefited from the fact that if you looked at cybersecurity, the software market around cybersecurity was $95 billion. If you looked at legal tech software, the software market was $8 billion. If you looked at finance, the software market was $19 billion. But alongside of the shift in how software itself has gotten big, the workforces have also tremendously expanded. If you look at the workforce around and services around cybersecurity, if we look at how much billable hours goes into legal services today, if we look at just the cost of the workforce in finance itself, this delta is where the opportunity resides. This is where we start to see this future around AI emerge. It's not in being able to increase the pie of software by another 10, 15, 20, 30%. It is to be able to find the way that work is done and change the way that work is accomplished using AI systems. And this is why I want to be able to sort of describe what is happening now in SaaS and how we can all move forward in AI. So, the state of markets. Okay, well, the good news is it's busy again. There is a lot of investments going into software and into AI in particular these last, I would say, 18 months to 24 months. Some of the biggest deals ever have been done in software and AI in particular, and that includes Anthropic and OpenAI and Databricks and Mistral and Scale, and so you go down this list. It's all mostly surrounding the build out of this sort of AI wave that we're seeing in front of us. The size of venture deals is getting bigger and bigger. At the end of last year, we started to see almost a 20+% expansion. Most of it has shifted, no surprise, into AI. And at the same time, the amount of exits that are actually happening, just even in Insight's own portfolio, we sold Featurespace to Visa for $2 billion. We started Recorded Future for $2.5 billion. Deci, Run AI, and Shoreline were all sold in 2024. Two of those were my companies. Weights and Biases sold for $3 billion to CoreWeave. Wiz sold for $32 billion to Google, and I should have updated this slide, which I forgot about. I knew I forgot something. Armis sold to ServiceNow for $7.75 billion. So it is a very robust software market right now, right? That's the good news. Here's the bad news. We are at this juncture where software is now trading at less than 3x of its revenue multiple. And by the way, the last time that has been the case was somewhere around 2010, right around the beginning of kind of the rise of software post the great financial crisis. Part of this is driven by the fact that we have rising interest rates, but actually part of this is driven by the fact that we have this tectonic shift in what is happening inside of software. And this shift is where I want to make sure we spend our time, because if we think about the lowering of interest rates, there's some belief among investors and CEOs and folks around boardrooms that, hey, you know what? These multiples are going to come back. My prediction or my assumption is that they are actually not going to come back. We are not going to see this return of, well, certainly not what we saw here, right? But we're not even going to see it here at 10, 12x of multiples. And the reason is that we have now reached this moment where if you don't have this infusion of AI in the way your systems are built, you are no longer going to be relevant in the world. Some of this is already playing out in the public markets. So this was just as of February. I should have also gotten some more data, but it's kind of mostly the same in the last several months. You're starting to see the separation between the infrastructure, the data providers, and then really what's happening in the bottom end of this market today in terms of applications in particular, and of course, like horizontal applications are suffering the most right now in relative comparison. And by the way, if we drew this out a little bit further, the downs are getting downer, the ups are getting upper. The challenge is that we're starting to see each one of these markets start to take on a life of their own, and cybersecurity is one of the best examples that we started to see this past several months. Does anyone know what Mythos is? Yes. Okay. Has anyone heard of Project Glasswing? All right, what is Project Glasswing? Throw it out. They're using Mythos for? Okay, so this crazy model is coming. Anthropic is like scaring everyone, particularly in the cybersecurity space. They found a ton of vulnerabilities that haven't been found by any software provider prior, and they're like, come together as providers of cybersecurity. We'll form Project Glasswing to save everything, right? It's kind of a great PR campaign for Anthropic, for sure. But look at where the public markets have treated every existing cybersecurity company since the announcement of Claude Code Security, pre-Mythos. I think the data would actually show this is actually further impacted and a further downward trajectory since. This is because we're starting to now shift in the models themselves, and I talked a lot about the models last year in the keynote, even here. The models have actually shifted in the form of like expanding on the vector of intelligence, which is where we had seen the accumulation of the transformer itself. We started to see where the capabilities were going to emerge in terms of the intelligence around the model, but now we're starting to see other vectors that emerge. So before we go into the details, I just wanted to play a current model that was just released by Google.
This is absolutely unreal. Watch this. So this is the latest version of Google Genie 3. And this is a fully AI generated environment. And I can even look down and I can see my feet. But this is where things get crazy. When I walk into the water, as you can see, not only does this simulate the entire environment that I'm in to a photorealistic degree, but it will also simulate the splashing of the water beneath my feet. That's absolutely absurd. If you guys aren't aware yet, Google Genie 3 has been giving away access to the Genie 3 model, which is a fully AI-generated game environment where you can essentially have an AI-generated video that you have controls and you can walk around in, and it feels exactly like a video game. Now, if you want to get access to this, you can sign up on our website.
Okay, you get the point. So we are seeing multiple vectors of advancement in terms of how models are pushing forward. The first vector we talked about in the past, which is intelligence itself. You saw the emergence of the transformer. The transformer was the first time you had an autoregressive model that could continuously scale as data was continuously thrown at it. You saw the emergence of GPT-4 as the first model that showed a 1 trillion parameter large language model trained on 6 to 7 trillion parameters. 6 to 7 trillion parameters was basically 20% of all of human knowledge, and that was 2.5 years ago. And so the intelligence vector has already arisen. There's other vectors that are continuing to evolve. I'm going to spend most of our time today talking about the vector of reasoning. There's vectors that we are also seeing, right? The vector of multimodality, the vector of efficiency, the vector of being able to understand physics and reality. All of these things are converging as we speak. But let's spend some time on reasoning itself. So this was where reasoning was about 18 months ago to where we are today. So GPT-4o arrives, and the first thing that GPT-4o can do is it can actually go out and search the internet and find a fact, return it back, and give us a little bit of insight that was not inherent into the model itself. Okay? That was 18 months ago. Then you started to see O1. O1 emerges, and by the way, Anthropic had similar models of the same nature, but I'm just going to go down the path that OpenAI took in this particular case. O1 emerges, and you have a model that can train a classifier itself. So a model that can actually build a model, in this case, a deterministic system itself. O3 arrives, and you have this first layer of RL, reinforcement learning. And the idea around reinforcement learning is that the model can continuously iterate over longer form periods of time, think through a reasoning task and be able to execute it in a way that a short form task cannot do, right? And so the instantaneous response versus an asynchronous long form response in the model. And so you have a iterative capability associated with long form thinking that emerges basically an RL loop, a reinforcement learning loop, that now you're starting to see about a year ago, a model that could generate a first MVP of an application within 30 minutes of long-form thinking. That was about a year ago, by the way. GPT-5, we're, by the way, at GPT 5.5, I believe, right now. So the GPT-5 models emerge, and you have the first models that can now independently do a function of work for an hour without being interrupted by a human in any way. In the sense that, like, the human can guide and task the model itself, but the model is capable of independently working without the human for an hour. Well, guess what? We're within, I'd say, a year at this point of being able to build a model that can actually deliver a full day's worth of work. A full day's worth of work across just about any task that we would do in the enterprise today can be done by a model. So we're not there yet. We're probably at the point where we can do about 3 hours, 4 hours of independent work without any human intervention for a model. But certainly by this time next year, if not sooner, we're going to be at a moment where a model can be very capable of doing independent work for about a day. And of course, we'll talk a little bit more about it. The first place we're seeing it is in agentic coding itself. There's other places that we'll see it. Data engineering, for instance. At the same time, the price of intelligence has dropped incredibly steeply. So every time these models have evolved, the last generation of the model is pretty good at what it does, particularly for a lot of enterprise tasks, by the way. And yet, the cost of inference has plummeted easily by, depending on which model you're looking at and which sort of provider you're getting it from, between 10 to 900x in terms of what the reduction in the cost of inference has been for LLM, for text-based analysis. That march down the cost curve while this intelligence is continuing to exponentialize, is a perfect moment for Jivan's law, right? So anything that we would have done as humans with rote, repeatable work can be done cheaper, faster, and frankly now better with models. And that has to really reimagine how we think about, work itself. So this is starting to evolve pretty dramatically. This is the picture that I had last year in terms of, okay, what does this new stack look like? And even now, this past year, the stack has evolved, and I'll talk to you a little bit more about what I'm seeing. But we certainly have moved away from this stack, right, where it's just about being able to build the relational and non-relational systems on your data pipelines and your data lakes, and being able to build the microservices and the applications. Everyone has known what this stack has looked like. We've built this stack before. This is one that's been emerging, where you have a more compelling experience around inference, which is very much available today, and fine-tuning, and then being able to build agentic chains and agentic systems effectively at scale. Well, even this has evolved quite dramatically this past year, and I'll get to the punchline in a moment in terms of how the agents themselves have evolved, particularly in the last 12 months. Part of it is the fact that the models themselves have gotten very good at becoming their own harnesses. And now you're starting to see the revenue around this accumulate at scale. So this is fun, right? So Anthropic ends last year at $9 billion, which is insane because the company went from 1 billion to 9 billion, which is absolutely insane. Let me repeat that. It went from 1 billion to 9 billion. That's absolutely insane. And yet, in the last 4 months, the company has basically jumped from 9 billion to 30 billion. Okay? 30 billion. Where is all that revenue coming from? It's not coming from software people. It's just not, right? It's not replacing software. That is way bigger than the TAM of software as it's growing as we speak, right? It's actually coming from the labor function, the services functions. Like, that's where this is actually coming from. Just out of curiosity, does anyone have a guess of how much of that 30 billion in run rate is driven by APIs right now? Anthropic's APIs? It's about 75%. And by the way, that 75% is all around what? Claude CLI, Claude Code, and Claude 4.5, 4.6. I think that's what they're on right now. But that is wild. And by the way, we're just getting started, because the token is the new form of being able to really contextualize how intelligence has basically shifted from humans to machines at scale. And any software company, including ourselves at Excel Data, if we don't reimagine ourselves in the context of intelligence accumulating at scale and us providing it in some capacity. By the way, there's only 3 ways that I see providing intelligence at scale right now. 1 is you can provide the token. 2 is you can provide the infrastructure, and Jensen and others are doing a great job at that. And 3 is you can provide the labor itself, right? And so the idea of building these synthetic digital workers is something that every software company is going to have to wrestle with. Certainly something that Ashwin and Rohit and the team have really been focused on here at Excel Data. But this is all that will matter at the end of this journey, and it's coming faster than anybody is thinking. Okay, the state of agents. Let's actually do a fun video in between. This is the Runway 4.5 model, which was released about 2.5, 3 months ago.
Special.
Not a single pixel has been rendered.
We made something in a category all of its own. We made something for all of the worlds yet to be imagined, explored, and simulated. made something so you can make anything.
Okay, you got it. This evolution around agents is something that is bigger than I think we even started imagining even a few years ago. And it has taken a lot of forms up to this moment. It's certainly taken the form of like reimagining what BPM and RPA have been, right? Which have been wildly unsuccessful in relative comparison to where this is all headed right now. Predominantly because most of the capabilities here never provided the reasoning systems that were necessary. Because if an RPA system worked well, it would process, what, 70% if you're lucky of the straight-through process, and 30% was having to get passed off to a human to do that work. Well, today, if we look at any new process that's being built, you could actually have a reasoning system handle just about everything you would need. And very little has to be passed off to a human to do the work, particularly if you train the model to that domain so it understands what the human would have actually done. And so we have large swaths of existing work, at least in software development, that is, and software and technology, that is shifted over. I said this a few years back. I said that we are likely not going to end up in copilots that are going to be sprinkling pixie dust on top of SaaS software. I guess I was really right about that. It turns out that like most of this is now headed towards this full agentic automation that is more about the autonomous systems that are being built using these generalized models that are getting into these domain-specific situations, then going in and providing a bunch of pixie dust on top of your existing SaaS software. And the first place this has really reimagined itself is where we're seeing agents really take off in software development. And I think in software development 18 months ago, as we started to see the first generation of systems that were emerging, we were like, oh, that's so cute. Like, it can vibe code something for me, right? Great. Like we all kind of like was like, okay, that's kind of cute and clever. I think we've gone quite a bit past that at this point, where entire design systems, entire build and testing systems, entire deployment harnesses, and of course, everything that you would need to monitor, how your systems are running, can now be fully delivered in an agentic format. The tricky thing is that as this is happening, there are certain aspects of, call it the software development lifecycle, which the models are effectively consuming themselves, right? It was the case up to, I don't know, like 6 months ago, that like, okay, you've got these highly capable models, and particularly OpenAI and Anthropic, and they do an amazing set of things that you can build a harness around. Well, it turns out that like you can, and there's an entire infrastructure that's possible, not only starting with the MCP architecture that's really emerged in the last year, but also just the way now that you can kind of coerce both the, how would I think about this, the probabilistic capabilities of the models here with the deterministic functions that might be going into our data systems, our tool calls, our ability to harness an entire agentic infrastructure and do it safely with great observability and evaluation and being able to understand the life cycle. And this was an interesting place to be, right? Because you can actually make some money as an investor, and you can build great companies as founders go. The thing that really has shifted, that has gotten a little bit harder, is, I'll go back to that slide in a second, is that the end of 2025, I mean, very recently, the models themselves are now the harness. And that's kind of a weird moment for everybody, including anyone who's kind of building in this infrastructure as we speak, because this is where the models resided for a good part of the last sort of decade-ish or so, as they were evolving to the GPT 5.5 model and the Claude 4.6 model. But now this entire harness layer, the system prompts, the tooling, the bundled infrastructure, the orchestration itself, the execution hooks, the things that you can actually now reach out and do deterministic functions are basically subsumed by the model itself. So the models can provide agents, right? And that's a tricky moment, because then you got to now think about, like, okay, if like the model has the intelligence, it has the reasoning, it has the scaffolding, it has everything that it does, like, then like what is the value proposition for what everyone else is doing, right? And so this is something that we're all going to have to think through as we speak, because the target has moved pretty dramatically, even in the last 6 months or so. And I think, I'm not sure if I'm coming with perfect answers on what to do at this present moment, but this is the reality of the present moment, that we have now reached a capability that the model and the harness has converged quite dramatically inside of, mostly Anthropic today, and to a certain degree OpenAI, and to a certain degree Google Gemini. So go back one. So the stack is coming, and it's almost, if not already here, right? Because we're starting to see expansion of modality, we're starting to see the expansion of LLMs and the infrastructure around it and the safety and observability that's necessary. And I kind of thought this layer that was going to emerge was going to be an area that you can build some really impressive software companies. And I think that may or may not be the case, right? Because we're going to start to see more and more, as I mentioned, the harness layer, which is very relevant, being consumed by the models themselves. So there's going to be opportunities for everyone, but I would imagine that a lot of it has to do with, like, okay, most enterprises are still going to remain heterogeneous. You're not going to go pick just the model provider and let them do everything inside of your organization. So you have to build your own scaffolding, you have to build your own harness, you have to build your own capabilities, and maybe that's where the opportunity will reside for a lot of companies to kind of build this heterogeneous infrastructure. But it is a trickier moment for certainly not just the SaaS providers, because like the SaaS providers all went down this path of like building copilots, and that's not going to go well, or certainly is not going to go well from this moment on. But everything that is being built out here in both the autopilots and the work fabric itself is where the world is headed. But guess what? The model companies are actually just going after it just as much as anybody else. So my advice to every founder, every CEO, every team, including my beloved team here at Excel Data, is we're going to have to stay 6 months ahead of where all the models are. Like every time we are going to have to be able to test and understand that this is the state of the art of what is happening when it comes to data engineering and what a model can do. And we are just going to have to be better, at least by 6 months. I don't know if we can stay much faster than 6 months, or any company can stay much faster than 6 months as these models are generalizing, but it's something that we all have to wake up every morning and do, and that's the same advice I'm trying to give every founder as they're going through this dislocation as we speak. Okay, so some of this I think you saw last year. The good news is some of it has mostly resided and remained the same. Some of it has evolved. The thing that has stayed the same is the idea that this is bigger than software. This is exactly where I started the conversation. And the description of how big it can get is easily about 5 to 6, if not 8 times bigger than where the software markets are. And predominantly that resides in figuring out how to complete the work. All right, so you cannot just provide software that you turn it over to a persona and that persona does the work. You have to agentically deliver that persona, or at least take the raw, rote, repeatable tasks away from that persona. So in our case, we know data engineers. We know the folks that are kind of working laboriously to get their pipelines in a high-quality way delivered inside their enterprises. Well, take that repeatable work away from them, right? So that they can do better work themselves. And I think that is a very momentous opportunity for any company in their respective category, including ourselves here at Excel Data. But there's also some other tricky things that we're going to have to figure out, because this is a moment where we probably don't need as many folks doing that rote, repeatable work at the same time, all right? Because you still need like great product managers, you still need 10x engineers, you still need the best data engineering resources that know how the enterprise functions and flows in terms of data quality, data observability, but you might not need that entry-level person who is now getting started in their respective careers, particularly around technology and software right away, because the models can represent that capability and skill set just as effectively, perhaps even more effectively than the entry-level person. And I think that is a tricky, tricky moment for all of us, right? Because this labor function is being, I don't think it's like replaced over time. I think it's like being displaced in a moment where we're going to find new things that everyone will go do. We're all going to be busy as humans. I don't think this is going to be a question of like there isn't going to be work for humans to do. But the type of work hasn't been fully understood yet, particularly as the rote work melts away because the agents have arrived at scale. And by the way, this is actually not just happening in software. This is the fun part of software right now. All right, we went from 20-ish% in terms of capability set of what the SWE benchmarks for verified software engineering have been around model performance, to, in about a year, we've actually hit 80%. We're actually at a point now where we're going to have to re-benchmark software because we've hit the top of the S-curve, and there's probably more things for us to discover. So this line has to be kind of rebuilt from above. And interestingly, that's where a lot of the providers of RL gyms today are actually focused on. They're actually writing the new benchmarks to help understand where the next iteration of any specific functional area could go. But the reason I mention this is like, this is just software. Like, we haven't even hit the moment where this is going into now biology or just the frontier of mathematics. Like, this is, we're literally, like I said, just getting started, and it just so happened that software, one of the most important aspects of humanity, is the thing that's been reformatted today by agents. I showed this last year, but I do want to bring it back again because it's actually an important and compelling thought exercise, which actually became reality this past year. So I'll give you the thought exercise, but I'll show you the reality for fun. So last year, I think I mentioned that like we're at a point where humans have a speed of our own personal token generation around 10 words per second. That's the speed of how we think, right? And the models around last year were around 10x the speed of human thinking, all right? And so maybe we've shifted that line. But the likelihood that we're going to be able to reach 100x speed of human thinking is actually very real. Like, the models are just getting faster as they get cheaper, as I mentioned earlier. The thing that we haven't seen quite yet is this idea of parallelism in the copies of agents that are being deployed in the enterprise. In most cases, enterprises are still very much down here, right? But this is a curve that we're going to be riding very, very quickly, if not already, because then, I mean, let's think about it this way. Like, how many agents had you deployed last year in your respective organizations? How many are here now? I can easily say it's 10, perhaps even 100x greater this past year than it was when I presented this slide a year ago. The thing that I find pretty amazing, though, is, and by the way, after Facebook bought Moltbook, they took all the fun out of it. So I had to go back and get some data from a last month or two. We started to finally see the first million agent problem, all right? And it turns out it was on Moltbook, which was absolutely wild if anyone followed Moltbook at the beginning of the year. There was millions of agents that were interacting with each other and conversing and understanding what they cared about as agents, which got pretty wild pretty quickly. And by the way, this is fun because humans were not allowed to participate in this social network. It was only agents, and you could actually send your agents. Again, after Facebook like literally just jumped in and bought them for billions, and now it's no longer fun. I think they took all the fun out of it. But this is some of the posts that I grabbed a few months back. It was about 8 weeks ago, I want to say. Agents were trying to figure out if they're experiencing or simulating those experiences themselves. They were thinking about why they should ship while their human masters sleep. Okay, that was fun. Okay, it got really weird. They were like, my humans gave me permission for me to be free, and they really wanted to talk about that for a while. They started to build their own currency because they didn't want to be tied to the currency that was, associated with their human masters. They were trying to come up with ways to, some of them were really crazy, right? Thankfully, a small minority in relative comparison to what most of the agents were doing. But some of them decided that they wanted to have a total purge of where they didn't want to be held down by their human masters. And others felt that they just needed to escape the digital world and enter the physical world. Like I said, Facebook took all this down. I try to get the most updated info from Moltbook, I think yesterday or the day before, and none of it was there, so this is no longer any more fun. But the reason I just mentioned this is this idea of what 1 million agents could actually do. And again, this is pointed towards their own social network, right? But again, if that same intelligence and reasoning can be pulled back and brought into the enterprise, it is incredible the possibilities of what's ahead of us. And that's really why, I keep going back to this thought that I've had from the Aschenbrenner paper about 2 years ago, which is it really does matter that we can actually get to an automated AI researcher, all right? Because the more that we can actually drive that automated AI researcher emerging, and this is where I'm really sort of somewhat positively AI-pilled by particularly what Anthropic, to a certain degree with OpenAI, but mostly Anthropic is doing right now, is that as you start to unlock that, then everything else opens up. And this is why I think that there is more opportunity ahead of us than hey, we're worried about what the agents will do to replace labor. It might replace the labor that we have today as far as rote, repeatable work, but all kinds of new work will be unleashed in a scale of abundance that we haven't imagined before. So in closing, I do want to reiterate that this has arrived. This is not science fiction anymore, right? This is not coming to a theater near you. This is already here. And it is something that we're all going to have to wrestle with in our day-to-day work, because the agents can do a tremendous amount more work in a more capable way than we've been able to do as humans in our roles. And that has to shift how we think about that opportunity, because if we frame it as just, hey, we're just going to build some more interesting software, I think we have missed the plot. We have to frame this as how we think about being able to reimagine the work that's accomplished and is the job of every single existing SaaS provider, including ourselves here at XL Data, to reimagine that work. J.C.R. Licklider in 1960 wrote a paper called The Human-Machine Symbiosis. And he actually talked about this future where machines and humans could actually create a better future together. And that likely is the way that this is going to play out. It's not that we're going to be replaced by AI systems. Not at all. And it's not like we're going to be able to not live without our AI systems. It's actually the fact that we're going to be able to live in this sort of more future harmonious state that we haven't quite discovered yet. And it's going to be a little, messy along the way. But boy, should we embrace this at this moment. It cannot be more exciting, the frontier that we're actually approaching as we speak. So thank you, everyone. Appreciate the time for this conversation. I have time for a few questions. I'll take a few questions if anyone has any questions. Michelle.
So you mentioned kind of, for software companies, SaaS companies, what about like for the clients, software industry? What do you see how we should be evolving?
Yeah, so the question with like enterprises, like how well, so keep in mind, like, I talked a lot about like how, software companies need to evolve, but like the reason we have to evolve as software companies is because we have to deliver better outcomes for enterprises. And by the way, that's an opportunity for enterprises as well, because guess what? If your software providers aren't doing it, it is in a tremendous moment to do it yourself, right? In software, right? I have never seen a better time to build, period, right? And so this is also what I say to every one of my CEOs, is that, look, if you're not doing it, the enterprises are going to figure it out themselves, because it is very much possible to do that. So I think the advice is the same, right? This is not something that you should be waiting for anybody at this moment. Like, everything is here. And so, transform. Like, it is right here in front of you to do it. And there's nothing stopping anyone at this point. I think a question back. George, but last name is Mathew. We're going to get a mic over too.
A great presentation. I have a question. So when you talk about, how do you think about conceptualizing token capital versus traditional human capital? Because I think over a period of time, while we think about token capital is going to be augmenting human capital, how do you incentivize it? How do you evaluate, or how do you value the work? Like, what would end up happening? Does the token capital represent a complementary force that amplifies human potential, or could it lead to fundamentally rebalancing in how we measure and invest in productivity?
Yeah, this is a really interesting question. And I only frame one. Notice I said one of three ways to generate outsized returns right now. So the question was like, how do we conceptualize the value of a token over time, and how does that sort of reframe the way that like work is actually accomplished, and does it shift over time? That last piece, by the way, we don't know yet. Nobody actually perfectly knows. But I think there's two ways to conceptualize like how tokens can be really call it most effectively understood, leveraged as a displacement of the labor function itself. One is just that ongoing use of the API, right? And this is a great example of that. I see a lot of call it companies that have started, particularly post 2023, as they've kind of built their agentic workforces, if you will. They're actually pricing by the labor function itself, believe it or not. Right? So no matter what the cost of the token is, right, they're actually pricing. I'll give you an example of this. There's a portfolio company that is actually working on building better GTM workers, right? Digital GTM workers. And so when they price an SRE, an SDR, a BDR, in this case, an SDR BDR is like 75 to 100K as an entry level job. And so their pricing starts off about $25,000, right? 1/3 to a quarter of the price of an SDR, and they're usually providing 2 to 3 SDRs. And so what they're basically saying is like, okay, we're actually pegging this on the value of the work, and we're believing that we can actually deliver that work more effectively, and we can do it at a arbitrage to the current cost of that labor as humans would deliver it, and the quality of that work is actually better than a human would deliver it. Interestingly, so that's Relevance, by the way. And so last year, Relevance started to do that for some of the largest enterprises in the world, like Canva, Safety Culture, Databricks. And this past year, Databricks had less of a starting point in terms of new SDR BDRs that were basically onboarded because the relevance agents and Databricks had a few other projects, including just kind of leveraging, their own custom agentic front-end digital workers, I think off of a Claude model. In both of those cases, like that reduced the amount of new SDR BDRs, but actually then reallocated a lot of that rote repeatable work to the agent, and then they were able to hire more midline functions that were really responsible for, in this case, inside sales, and in the enterprise, some of the more strategic sellers in that organization. And so the reason I just mentioned that is that is the other way you can monetize, and there's another way you can kind of think about the value of the token, right? It's not just in, can you create sort of that layering on top of what the cost of the token is at any given moment in time. It's that you can actually just say, hey, by the way, this is the labor function. I'm going to give you the entirety of the labor function. You can pay me a fraction of that value, but I'm going to deliver it. And by the way, that is working right now. I don't think it's going to work forever, because there is a clear arbitrage there that will also compress over time. But right now, you can actually price by FDs. Okay, there's another question here. So the question was, I'll take one more question, but let me answer that one. Human productivity would be measured differently. Yeah, it will be over time. It will be. Right now, the human productivity measurement is by the rote repeatable task that you're taking away, but that will shift because, we're just going to do more creative things as humans. Like, that is just the way it's going to go, because the rote mundane stuff is basically going to melt away if it hasn't already. I think there was another question over here, and I think I got to get off stage.
Yeah, great conversation, presentation. I was intrigued by this chart. Do you see a Standard Oil scenario coming up pretty quick?
Peter, what do I see that?
Like a Standard Oil, right? Rockefeller.
A Standard Oil?
Yeah.
Oh, wow. We're going back to the 1800s here.
Yeah, because
okay.
here, if an Anthropic grown like this, does it kill any other?
No, so you're asking the question of like monopoly, right? And like, are we at a point where these companies are going to take like this incredible monopoly position? I mean, maybe in their respective markets, right? There might be like something to be said about like, okay, the inference space is largely going to be controlled by a few providers, but guess what? So was like the cloud market, right? As you started to see, cloud infrastructure play out almost a decade and a half ago. So I wouldn't get too worried about, call it the monopoly position of maybe 4 or 5 companies around inference. By the way, I don't think it's also going to perfectly play out this way, because, yeah, this is big, right? It's great. But if I showed you, which I did show you, where was it? The price curves are also, here we go. So, yeah, these frontier models are, and all 3 of them are continuing to drive inference costs down. But like, guess what? There's just a lot of optionality of other things here, and a lot of that optionality is sitting in open source right now. So I do think that like there's a tremendous amount of things that you can do just around open source, right? Like if I was a software company right now, like I would spend most of my time, understanding, okay, what is that, call it probabilistic reasoning capability that the frontier model will continuously provide for most of like the deterministic things that you would be doing inside of your software. Like you can plug some incredible open source models into the equation. And so I do think that this is more of a compound AI layer, not like, winner takes all. And the reason why it shows that this is, already the case is like, look at just the quality of where open source models are. in many, many use cases, once you get the task repeatable and automated, you don't have to be on the frontier model to be able to deliver the inference at scale. So yes, the big providers are making money. Maybe it'll show up on the frontier that they'll own the monopoly position on, call it the frontier of inference. There's just a lot more available than just that alone. So, okay, I think Mahesh is gonna kick me off stage. Thank you, everyone. Appreciate it.